Hey, what's up, guys? Good morning. So today I want to introduce the concept of liquidity in finding directional buyers and how to pick up quality trades. So let me start off by explaining some few things. First, let me explain what a liquidity block is. So a liquidity block is when you have established something like this on the market. Let's say you have a low, a high, a lower low, and price breaks out from this high. So your liquidity block is actually this. So you have a sweep here, then break of structure. So this entire zone where you have this is what is called your liquidity block. And what this does is that when the market eventually comes back, this level will be protected. That is to say, even if the market does something like this and maybe goes up, if the market should come back, it will come take out this place as liquidity, then probably tap into this liquidity block and start continue buying upward. So that's just the concept of liquidity block. The reverse is the case for a downtrend. So the second concept, let me check if this is recording. Okay. So the second concept I want to talk about is liquidity. So when you have something like this, let's say you have something like this, and the market continue buying, this is liquidity. This double bottom or double top, as may have it, this is liquidity. This market will come back and take that place as liquidity. So the market may react like this. Come on. As liquidity. Another scenario is when you have something like this. Let's say you have something like this. Let's say you have something like this, and the markets so for this one, this is your liquidity. The last low that was created in the market, the last significant low that was created in the market, this is your liquidity. And this needs to be taken out before any continuation trade can happen. So this is how to spot liquidity. If you can spot liquidity this way, you don't need to stress yourself to know about trendline liquidity and the rest of them. You just stick to this. Okay, so let me go to the chart and explain what I mean. The chart. So this is NZDUSD. So on NZDUSD, what can we see? So the first thing I'm going to explain here is what is called a trap and how to identify them in the market. So basically for trap, sorry, I was supposed to explain that before I continue. For traps, if the market should come down like this, come down and react let's say react from this point, goes up, come down and react from this point and continue bullish. Now for traps, it means that whenever the market should come back to this, well, once the market reacts from this point, this place becomes a trap. What it means that whenever the market comes back to that place, that level will no longer hold. That level will be taken as what? Liquidity. Please pay attention to this. You get also at this point in time when the market reacts, come down to this point, retest and continues going upwards, this place does no longer hold. Okay, so these places are now what? Liquidity. You can tag them as trendline liquidity, or this place are what? Liquidity. We can wait for the market to take them out, or you can actually draw a line like this indicating that all these levels are what? Are buy side trap. You get, whenever the market comes back to this zone, buyers, some people, retail traders, or some people will be trying to buy from this point, but it's no longer going to hold again because it has already taken out, because what's it called, stop orders are resting below this zone, like your stop loss and everything. So whenever the market comes to that point, it will no longer hold. So I'll explain the concept of trap in this video so that I'm going to combine everything in this video so that you understand the logic. So let's start from this point here, from where we have our sweep. So for this point, we don't want to know what is going on at this point in time. Well, we just want to understand the flow of this market from this point. So from this point, you can see that we had a sweep. I said that we had a sweep, very important at that point. So by now you already know the concept of order block, so that was why I didn't explain that. So this is a sweep, and since this is a sweep, like I explained, and a break of structure which happened here, break of structure which happened here to the upside. So with that simple logic I gave you before, it means that everything here is what? Everything here is what? Is a liquidity block. Everything here from this point to this point to this place, what is a liquidity block. That means you should be anticipating to buy this market inside of this zone, but now this zone is too big for us to buy from this market. You get? So I will also show you how to do that. So let's continue. So when the market broke structure to the upside, immediately this happened. You already know that your point of interest is this order block here. So different people have their different ways for marking out order block, but for me, the way I mark out order block is simply the candle that swept this low, the candle, that particular candle on that time frame that swept this low, that caused this sweep, or the last two red candle, or the last candle. So it depends. For this one, I'm taking this last two candle and also the candle that sweep this one. So it's what's it called? It's not constant. You get? Different people have different ways for marking their order block. So that being said, so we already know that our this thing, we already marked our order block, and we're expecting this market to come back to this zone. You get? Now, this market coming down to this zone alone does not mean that this market is going to buy. You get? For this market to buy, you need to know where liquidity is resting on. You get? Now let's check this chart now. So when the market started selling, we had what? Another liquidity block up here. So this was the low that was created, and we had this liquidity block here up here. This liquidity block. So automatically we have what? We have a strong high. You get? A strong high that we are not expecting this market to take out anytime soon. Now, where is liquidity resting on? So for me, the simple way I normally do it is, if I'm to mark out this whole point as what? As my liquidity block, meaning I'm expecting price to come inside of this box. For me to know where my structural liquidity is acting on this chart is the last high So this is the, since this is the high, this is the low, so the last internal high inside of this zone is where is going to be my liquidity. So if I mark that point out, I'm going to mark it with what? With blue. So sorry, I'm going to change the color to blue. So this is now what? My structural liquidity. So what it means is that if I should take a trade here from this point here where I'm anticipating this buy to happen, if I take that trade from this point, long position, I am not going to do any other thing until this high is taken out. Yet. So this is how I plan my trade. Now remember what I told you before, that since this place has been tested already, this particular zone has been tested already, it also means that whenever price should come back, if price should come back to this zone will no longer hold. This particular zone will no longer hold this zone, because of what? Price have retested this zone. So this zone is now what? Liquidity. So if I should sell this market from that point up there, if I should start selling, I should know if there is liquidity below that can fuel this price to the downside. So in this case, there is liquidity below. So if we are to target this trade now, if we want to sell this market down, our target is going to be at this low. This is where we have what? Our valid liquidity. Okay. Now it means that this zone is valid for liquidity. It's valid for, like, it's a valid zone to take. Okay. But then you have to treat the internal ones first. So let's see where we have traps in this market going up. Okay, because we already know that, okay, we are going to sell this market because of what? Liquidity has been taken out. So since liquidity has been taken out from that zone, if you want, you can also mark your order block from this point here. You mark the candle that took out that distance, rest past the candle. You mark your order block here. You can see that the market is already reacting from this zone. So that is a valid sell position. But not only that, we need to know where there is liquidity, because that liquidity will help us to know where is fueling price. So we have another liquidity block here. You get, and a break of structure. So this alone is telling us that for the main time that this zone is what? Protected. That means this low is what? Protected. Let me use black here to indicate that this zone is protected. So what it means is that before this market will come down and take out this our external liquidity here, before it will come down and take out this external liquidity, it needs to react off from this zone. You get, it cannot just break this zone. You need to react from this zone first, then probably take out another internal liquidity from the upside before this market can go down. So this is how you know zones that are valid and zones that are not valid. You get. Now not only that alone, not only that we have the break of structure here and a sweep making this zone protected, we also had another break of structure here. You can't see it clearly. We also had another break of structure to the upside. And a sweep, which is this. So since we have a break of structure to the outside and a sweep here, this zone is our most recent break of structure. So this is where we are going to plan our trade idea around. So that being said, it means that my order block or my point of interest is going to be at this point. But now on this time frame, from this time frame, you can see that we don't have any liquidity resting along these highs. You get what I mean? Liquidity resting among these legs, that this particular leg that caused this break of structure, now we can't see any liquidity in this time frame. You get. So for this, I've gotten my direction. You get. For this particular place here, we are bullish. You get. We are still bullish here. You get, until otherwise. You get. So I'm looking at bullish price action. So what I want to say is that I want to see price comes into this zone, taps into this zone, and probably if there is liquidity above this zone, it will take that liquidity out. How are we going to do if there's liquidity above that zone? We need to check for trap. So for us to check for trap, since on the daily time frame this market is squeezed, you get, well, we already know the direction of the market. We already know where the main trend is. So the next thing to do is to go down to the lower time frame. Okay, so our interest now is within this zone. So on the lower time frame, this is what we can see. Now before I continue, remember that this zone where you have marked your order block, price does not necessarily need to come there. If there's liquidity above, price can just come and take out those liquidity and continue going upward. For instance, if I should zoom in here, if I should zoom into this point here, you can see that there is liquidity resting around this point here. So what this means is that if price should come down to this zone, price might just take out this zone here as liquidity and continue buying. So that's what I was trying to explain. So I've already marked out where we have liquidity currently on this chart. You get. Now we want to do, if we should start buying from this point here, is there liquidity above? So for us to know if there is liquidity above, that is why we came down to the forward time frame. So on the forward time frame, what do we have here? We had this low being taken out, and we had liquidity above, meaning buyers were trapped. So all those that bought from this zone, that started buying from this zone, were trapped up here. So it means this zone here has been retested. Therefore, it is a trap for future sellers. You get. So once the market comes down and take out this liquidity, that place is now what? Is now a potential target, because there's liquidity doing what? Resting above that high. So let me color it blue. So going forward, now let's look at the next stage now. So when this zone was retested, what do we have? We had another liquidity block here. This is a liquidity block. We had a sweep and a break of structure. So since we have a sweep and a break of structure, it means that everything here from this high to this break of structure is my what? Is my liquidity block. Now what do I say about liquidity block again? I say for me to know where liquidity is resting in that liquidity block, I need to check out for the last internal high. You get. The internal high there is where liquidity is resting. So for this is where I have my liquidity. So this is where I have liquidity. You get. So let's analyze our next trade for NU now. So our next trade for NU is not going to be this. The market is not going to react from this zone. Short position, because we want the market to take out this liquidity and continue selling, because there is liquidity below that needs to be taken out. Okay, first target is going to be around this zone because of this thing. Then our take profit, our stop loss is going to be around this zone. So this is actually a 1:5 trade. You get. So this is our target. This is our target. You can just make it black. You get. Okay, so why are we targeting this point? We're targeting this point because there is liquidity resting below this zone. Now this zone has been retested. See it here, it has been retested. Not only has it been retested, it has accumulated liquidity below. So this point, this low, and this low, all these are what liquidities that need to be taken out. Okay, I hope you understand that. So going forward, if I want to dissect this price action more, I can go to the 1 hour time frame. So the 1 hour time frame becomes more clear. Let's look at, this is what we're looking at. So this is our liquidity sweep. See it correctly. A valid liquidity sweep, a break of structure, and we have liquidity above. So definitely this is where this market is coming to. Now last week Friday, let me check. Okay, this is Friday, 8 o'clock, and we rallied to the upside. So let's see why this market is reacting the way it's reacting from this point. Now from this point here, if we check this point here, we can see that we had what? We had a liquidity sweep here too. For those that like to day trade or that would like to scalp, this is a scalping trade for you. And we had what? A break of structure. Now remember, whenever you have your liquidity block and a break of structure, that is a sweep break of structure, that zone entirely from the high, from the last high that caused that break of structure to this low is your liquidity block. So whatever low that is there needs to be taken out before the market can go to the other side. So this was the last low that was created, and we had what? Double bottom, sorry. So this was actually liquidity. You see, even that Friday the market came down but couldn't take out that zone again. So as of today, very early in the morning, very early this morning today, the market has taken out this whole low, which is acting as what? Liquidity. Acting as liquidity. So for me, the way I trade is I do not necessarily need to wait for the market to tap into my order block, except if I'm looking for precise entry. You get something like this. If I'm looking for precise entry, I can say, okay, I can mark out my order block. This, you get, yeah, I can mark out this order block like this. I can mark out this order block like this. For me, the way I trade is, well, once I have already marked out this zone and I know where liquidity is resting on this chart, the only thing I can do there is to place my limit order or market execution on that liquidity from this zone, because sometimes my stop loss is going to be below that liquidity block. Again, I target whatever I want to target. So if you want to target this high that was created here, this particular one, this is already 1:3. But now I see the logic. Why are you targeting this high when you already know that there is a bigger liquidity that needs to be taken out here before this market could change direction? So you can just actually leave your trade up to that point, which is going to give you what? 1:5. So this was a very valid trade, you get. So, but I'm not currently in the market now because this is not my section. This is currently in the night when I'm recording this video. So if you trade Asian section, you should be able to get this move, you get. So I'm actually waiting for this particular move here, which is the sell, for me to sell down to this point, you get. So that is that for NZD USD. Now let me just check out okay, for BTC. The same concept is what I use for this BTC trade, and as you can see, the trade is already moving in my direction, and I'm waiting for it to hit my targets, you get. So as you can see that I have a lot of traps, you get, building up already on this chart, you get. That is why my overall target is at that point in time. So today I will not be doing a breakdown on BTC. Let me check USDJPY. So for this, I'm not going to be explaining too much again. I will just explain what I'm expecting. Then I believe you understand if I just explain what I'm expecting. So for this, where do we have this thing? Okay, so for this, first of all, we had a liquidity block here, and inside of that liquidity block, I've already mapped out my most recent high in that zone, which is that blue zone. So at this point in time, I'm not doing anything. I'm just waiting for price to come into that zone and take out. If price should come back into that zone and take out that high, of which I'm expecting that to happen between today being Monday and or Tuesday, then I'm going to take sales down. Now my sales, for me to take this sell, now look at all my traps. You can see from this point here, this particular point, this market came down here, retested this zone. That is why I have this trap This trap here means that this place is liquidity. The same thing happened here. This place is not liquidity. So that is how I was marking all my trap. So for me, if this market starts selling, I already know that all these zones are not going to hold. They're already traps. You get, they've already been retested, so they're not going to hold any longer. So some persons might just want to draw trend line. I just want to draw a trend line like this and say, okay, all this is now what a trend line liquidity. You get, so but I don't just want to draw too many lines on my chart. So as of now, I already know that this market needs to come down and take out this other blue line here, because this other blue line here is also what is also liquidity. You get, you can see, because on the bigger picture, this is where the main retest happened after that liquidity block, or after we had that sweep. So that place is now what liquidity. So if I want to mark my point of interest, I use this light blue line. Then, well, after the market might have reacted from that point, I will now change it to what, so this red line to indicate that, okay, this is now what liquidity. As I was saying, I'm waiting for market to take out that high above for us to start selling USDJPY. Now, before we even sell USDJPY, let's look at what happened. Why is the market currently buying inside of this zone? So where I'm trying to pay attention now is this zone here. This particular point here is where I'm paying attention. I mean, this particular point. That particular point is where I'm trying to pay attention. So as you can see, we had a break of structure and the market came back to react from that zone. Now, when the market reacted from this zone, not only did the market react from that zone, it gave us what? A liquidity block, very, very important, a sweep, and what? And a break of structure. And a break of structure. This is the break of structure. So if you have been following what I've been explaining since, you notice that whenever there is a sweep and a break of structure, that place is what is your liquidity block. So it means that whenever the market comes down to that zone, we are going to take entry. But now I said that the last low that was created inside of that liquidity block is what is actually what your liquidity, right? So where is the last zone that was created? So if you cannot picture it from this point here, then you might need to go down to lower time frame and check. So for me, I can see it here. Well, let me go down to lower time frame so that you can see it clearly. So I'll go back to lower time frame. 15 minutes. So on the 15 minutes, this is how it looks like. It's supposed to be something around here, something like this. Okay, for this, we didn't actually take out this. We didn't actually take out the whole thing, but the market actually came down. Okay, the market actually came down. 30 minutes. So for me, I wouldn't have even taken this trade. Okay, probably spread would have put me in this trade if I had a limit order here. Probably spread would have put me in this trade, but ideally I would have waited for this market to take out that low before buying, because what can still happen is that this market can still come down and take out this low, because what is happening here is that this is now equal lows in the market. We call it double bottoms and double tops. This is the first low and this is the second low. So any other thing that can happen here is that this market can still come back like this, go down right like this, then take out this low and continue buying. But then it takes a lot of money to do this, so I feel like the market will just go straight into these highs, take out that high. Probably this might not happen when the market start coming down. Okay, so for USDJPY, this is my trade setup. I'm looking for shorts and I'm waiting for the market to take out this low. Once the market take out that low, I'll just target this low. So that's approximately what 1:2. So it should be lower. That's 1:5, and I'm going to hold that trade down to this point. Then for the last trade example I want to show, sorry about this. Okay, let me check GBPUSD. So for GBPUSD, let's go to the daily time frame. So almost the same thing with this thing. What's it called? for G, if you check my Instagram post, you notice that I've been on these sales since. Okay, so where are we expecting to buy GU again? Okay, because GU is bullish. Everything that all the whole sales that you're seeing here is just correction. So with this logic, you can see that we have a break of structure here to the upside, and we have what? We have a sweep below. So if you cannot see that sweep, if you cannot see things clearly, you go to one time frame below. So if I go to the 4-hour time frame, you can see that we have a sweep. This is a valid sweep here, even at this point here to all this. Okay, sorry, not here. We had a valid sweep here, and also had a valid sweep here, this particular one. But let me use this one because this one is the higher time frame one. So this is our sweep. So remember what I said earlier on, that after this, your liquidity block is everything inside of this point here. That's your liquidity block. This is your liquidity block. You get. But then I also say that for you to know where you are going to take your trades, you need to check the last internal low. You get. For this one, the last internal low or the last internal high. So for this, let's go with the last internal low, and also at the double bottom there. This last internal low is this. So currently now, I'm not doing anything on GU. I'm waiting for the market to come down and take out this low. If the market takes out this low, then my point of interest is going to be directly below that low. This is how my point of interest is going to be. Then, since the market is coming to take out this low, we need to know where exactly will this market go to when it starts going up. So first thing first to check is the buy side traps. So these are the buy side traps, of which if the market comes back to that zone, it will no longer respect them. So our first one is this point here. This is a trap. So if that is our first trap, automatically we have liquidity resting above this high. So that means my overall target is going to be that zone. But not only that, we also have liquidities here. This zone is a trap. So that zone can I see? We also have this one, this recent one. This was where I took the sales I took last week. This particular one here. So for GU, what I can see on GU is that we are taking buys from this zone as stop loss below that liquidity block, just below that liquidity block. Then our take profit is going to be at this point. This is about 1:6. So if you can hold this particular trade for 1 month, it's better than jumping from one trade to another. So on the lower time frame, what am I expecting on GU? You get. For GU, what I'm expecting on GU is that if GU can take out, because this was Friday's high. Yeah, that's Friday's high. But there's also a liquidity block. There's something around that nature. So let me check 15 minutes. Okay. So the market might respect that zone. Just take out this high here. This particular high. Just take out this particular high. And continue selling, because this looks like a sweep. This is a sweep. Break of structure. Break of structure. So probably during London section, this market might take out that high. Then let me go further and check 5 minutes time frame to see if this structure aligns. Okay. Highest scenario that might happen here is that this market might come out for this liquidity here. Might come up to that zone, take out that zone, then start selling again. Shorts. So depending on how the price reacts from this, though I'm not taking these entries because these entries are lower probability for me. But if this market should break above this zone and comes to this zone here, I'm shorting GU down to where we have this liquidity. That is about 1:7. You get, I'm shorting GU. That is if this happens, and my stop loss is going to be above this high. So this is like a lower time frame entry. So let me do it back again. So we're going to be having shorts here. Also this rubbish now. Or you can decide to target this zone here, get. But then for me, since I already know the direction of the market, I'll be targeting this point. So this is my trade setup for GU, what I'm anticipating. Yeah, so I hope you understand the concept of liquidity and structure. It's very simple. Just if you put your mind, first thing you need to know your liquidity block, how to mark up your liquidity block. You need to know how to mark up trap, to know where liquidity is resting, either below or above. Then that's just it.